Hello and welcome to the week ahead video. A couple of things to brief you on as we head in towards the next 5 trading sessions. First of all, we have already entered the 7th consecutive day of partial government shutdown over in the US as both the Republicans and the Democrats refuse to budge, with both sides not currently willing to negotiate. This comes just 10 days ahead of that October 17th deadline where the US will breach the debt ceiling. Now, many speakers, including the Treasury Secretary Jack Lew, have reiterated the importance of not breaching that deadline, potentially and hypothetically risking default of the United States. However, this does not remain the baseline scenario, with most research houses and investment banks seeing a last-minute decision pushed through in Congress that could potentially bundle together a continuing resolution for the end of the government shutdown and a raising of the debt ceiling. This is likely to come at some costs, as the Republicans' opposition to the Affordable Health Care Act could be counteracted by some sort of Republican approval of potentially the Keystone XL pipeline extension. So as we head through the rest of the session and the rest of the week, let's see if any of the delayed data releases that we have seen could potentially be brought back with another schedule. This is after we did not receive that non-farm payrolls figure last Friday. But in terms of the figures that are due to be released over the next 5 days that could potentially be subject to delay, that includes the PPI report, trade balance figures, as well as retail sales rounding off the week, so those could also be subject to potentially a couple of weeks delay. Elsewhere, though, coming away from the US, the German Chancellor Merkel has entered into her negotiation talks with the opposition SPD and Green Party over in Germany, so we could have a clearer picture of how the makeup of a governing coalition in Germany could look by the week's end. Then this week we also have the key FOMC minutes from their surprise decision in September not to taper their QE programme, so we'll see the rationale behind that, as most analysts now see a taper being pushed further into the distant future as the US government shutdown hampers growth in the US. And then on a final note, the Bank of England Governor Mark Carney reassembles his Monetary Policy Committee, where expectations are for rates and QE to be held unchanged as the MPC continue to wait for their critical forward guidance to filter its way through into market expectations. But in the meantime, that's all from me. I hope you've had a fantastic weekend. I hope you have an even better 5 days of trade.